Hello, this is Stefan Dote. It's May 29, 2014, and I'm here from Trading Candles. I'd just like to start with our little disclaimer. We are not financial advisors, and any material we show you here today is for educational purposes only, and please do your own due diligence before making any trades. I'd also like to add that if you're viewing this video on YouTube, that you may go to our website and stream it from WebEx, and you may get a much better video sharpness, a much better view of the charts. So I'm just going to start where we left off yesterday. Today we did make a few sales and add a few new positions. One of the sales we made yesterday was in the transportation sector here, where we sold off IYT, going up pretty good here, and with the MACD at the top. And as I was saying, in the sideways market, it's good to sell into strength and buy into weakness. So today, I took a further look at some of our other holdings, Canadian Pacific Railroad, which we looked at yesterday. Give it a minute here to pull up. And this is pretty much showing the same kind of action as IYT, a little less strength, but we're still showing strength up here on the MACD. We had been holding this for quite a while, and I decided to go ahead and sell this today. I'm sure we'll be back into it in the future, and also by proxy, Union Pacific Railroad. Again, here we will give a minute to pull up here in the chart. So this one's looking quite strong. This chart's actually much better than Canadian Pacific. Maybe holding on, it didn't quite have the fundamental. But the point being, I was looking around today, and we have recently purchased into XOP, which is the oil refinery and manufacturers industry. Here's the chart as it shows. It's a bit of a choppy chart, but we did buy down in here, and we've had this nice little run. Now, kind of notice the difference. We have the MACD is just crossing the signal line and making a run up as opposed to being way up near its highs. Now, what's that? Let me go down to a 6-month chart for a little better view here. So, yesterday I was talking about selling some stocks because we were coming up near the old highs, and I was worried we were maybe going to have an issue breaking through them. Well, you know, we were up here again with this indicator, the MACD. And you can come to our website, some of our classes, and I can explain really how to read this. You know, you can look at it in the book and, you know, see how it's formed, but knowing how to read it in tandem with candle action is a whole other thing than book learning. But so we have really great candles, no topping tails. Yesterday we spoke of these topping tails, all these topping tails like this that just show weakness. And, you know, you can see the MACD coming down. And similar to here, you see one topping tail, but then you see close at the top, close at the top, close at the top, candle getting smaller, MACD moving up. So big sign of strength in that area. And then, of course, it peaks way out up here. So even if you do a support and resistance here on the MACD, you're looking at 1 plus a little bit. So we would expect the MACD to run up into here before it runs into problems. I did run a target on it. I think we'll have to go out to 1 year to see the target, 1-year chart. So I just pulled the 1-year chart. We're at 77.83, and my target here is at 82.62, and my target frame would be in about 2.5 months. So June, July, somewhere in August, I think we could be up in the 82 82 range. And again, this is oil production, gas exploration, kind of the backbone for the energy industry in terms of infrastructure. So I was looking at Baker Hughes, BHI. Now BHI has this nice kind of wandering trend, but still up. It's stuck in a sideways range here, but the MACD itself is also crossing its signal line. So these two, the stock and this ETF, are coming out of a period of weakness and starting to show some strength. So in essence, what we've done is we have moved out of the transportation sector, which is being very strong and, by all means could continue in that direction, and have taken our money and moved it over here into the oil production area, which seems to have a little bit of momentum behind it. And so we're kind of hoping that'll pay off for us. And, that's kind of just a brief view of watching a sector shift, watching the trader shift sectors through a chart. And, that's how we move our money around, keep on top of it. Now, today we also added to our silver position, SLV. Give that a minute here to pull up. A little slow internet tonight. And as you can see, every time it comes down into this area, we get a little pop. And, these are 5% pops. So I am just keeping adding to our position, which is actually the largest position in our portfolio at this point. And as long as it stays down here, I'm going to just keep adding and adding. And when I get my 5% pop, I'm going to take my profit and go on from there. So I think in the end, that should be a decent trade. The other position we added to today is PKG. This is in the paper industry. Its sister stock would be International Paper. I like the valuation on this stock. I've traded in and out of this stock quite a bit. And again, we have a strengthening MACD here. It's crossing our zero line, and we have broken above the 50-day moving average. I'm not sure what kind of volume today, probably not much, but it's average volume. But again, here's a weak sector, and we're seeing it just kind of move up, and especially because I like the fundamentals, I could see it moving back up here into the, somewhere up into the 70s pretty easily. So we added to that position and holding on to this a little bit longer than many positions. Which brings me to another indication of a sideways trend just from my own trading experience. My average hold time, or our average hold time here at Trading Candles, is less than 30 days on most equities. And we return an average of about 4% in less than 30 days on most of our trades on average, picking the winners and the losers. But in the last month, we've been holding stocks 70 to 90 days. The Canadian Pacific we sold today, we've had for 3 months and only had maybe a 3% gain in that. And I'd rather not have my money tied up in something like that for 3 months and really kind of feel like you have a 50-50 chance of which way it's going. Again, I'm a high probability trader, and I like to have about a 70% chance of making a win on the gamble, not the gamble, but on the trade. I don't like to say gamble. We're not gambling. We're making educated, weight of the evidence decisions. The trading is a decision-making process. It is not gambling. So I need to correct that statement. We need to make sure we understand that trading is a decision-making process, and we base it on the weight of the evidence. So The last stock we purchased today was Mylan, which is a pharmaceutical company. Let that pull up. Now, to show that we're human, we actually broke our rules when we purchased this stock today, and we broke the rule of rushing. For some reason, emotion overtook us. The market was closing, and we decided we really wanted to be in this position. And honestly, with the kind of low volatility the stock has, we could have just made a better decision, put an order in tonight, to get into it in the morning. That being said, it's really not a bad stock. As you can see here, it's in a wedge. So we have higher lows, we have lower highs. This is typically a continuation pattern of the previous trend. So we have our nice uptrend here over the year, and now we've formed this wedge. And let me go back to our 6-month so we can see the candles better. And so a lot of traders will buy, kind of down off the support level and then just hop out if it pops down here. Personally, our style is to maybe purchase a half a position down here and another half a position when it breaks out of the top of this wedge, and let it run from there. Now, the reservation I have on this trade, and we are going to keep a tight leash on this, certainly not below this line, is that if you pull up the pharmaceutical ETF, you can see that this has really been all over the place. It's a really kind of ugly looking chart, and no momentum. So there's not much, behind it. If you could look at the biotechs, which this may fit into somewhat, should probably have a better looking chart, but recently has been down quite a bit. Actually, yeah, it's been down quite a lot. So we're kind of hoping these two industries are going to push up our position in Mylan, but always trade the stock you're trading. It's good to have a basis and other supporting elements, but in the end, look at the chart that you're trading and trade that chart. So this broke our rules. It wasn't a terrible mistake, but we have to acknowledge, we could have made a better decision. But we have our MACD coming up. We're still in that wedge, and we can continue in this wedge for quite a while by the looks of the other two charts. Most stocks, when you have the market moving in a certain direction, 70% of the stocks are going to follow that direction. So if the market's moving sideways, you're going to have 70% of the market going sideways, 15% going up, 15% going down. And the same with the industry. When we see the industry like this, we can expect about 70% of the stocks to be doing the same thing. But, there's always going to be a standout on the upside and a standout on the downside. So to briefly wrap this up, we sold 2 positions today, Canadian Pacific, CP, and United Pacific, UNP. We added to our current silver position, SLV, and added to our PKG position. We initiated a new position on BHI and a new position on MYL. So that makes 7 trades in a row that we have closed with a profit here in the last month. And I was looking at our records, and over the last 220 trades, our win rate is still up over 70%. So 70% of the time, we know we're going to make a profit on the trades we enter. Having those statistics helps you make better decisions, because you know how many losers to expect, how many winners to expect. So it's a good thing to keep an expectancy ratio going. The whole formula for that, again, that would be, part of an education experience with us that we can help you with. And I think that's all I have to show today. Actually, let me show one more thing since we're here. And we are going to pull up our S&P 500, our Dow Jones, our NASDAQ, and our Russell. Well, again, yesterday we spoke about the Dow Jones having a hard time breaking its last high, and the Dow Jones being supported by the transport, which is the IYT, again, was another reason to take some money off of the transportation sector. So that being said, again, please, if this video is unclear, please go to our website, tradingcandles.com. Right there on the home page, on the blog, there'll be links to this YouTube video, but there'll also be a link to a WebEx stream. You do not have to download any software. You can stream it, and the resolution is much better quality. Thank you very much. Happy trading, and let's learn to profit together.